goes, Dave.
Hello.
Hello.
Good afternoon. I'm sure we're all so stimulated and inspired by what exactly we get to hear and also see come into action with the announcement of this fund. I think, again, that's like the biggest focus of today, is that not only have they committed to doing this once, but they're going to do it ongoing, right? My name is, yes, come on, round of applause, absolutely. As mentioned, my name is Miranda Perez. I'm a current reporter at Built-In, business and startups reporter by way of Insider. I also freelance. I've been seen on MSNBC, The Nation, Wire Media, they got acquired, and so on. This is really my bread and butter of what I do, not only as far as business reporting, but really highlighting and focusing on marginalized voices in this space. And I'm here to take any questions from the audience, but I do have a question first that I want to get us going on. That's okay. So as far as venture capital goes and investing, I think we all know not only like our communities of color underinvested, but the checks are lower, right? So when we talk about the commitment of this fund, how are we ensuring that we're not only investing into people of color, but they're also getting equal amounts of funding to their white counterparts?
I'll start from a little entrepreneur perspective.
Come on, Morehouse.
Is that what you screaming Clark over there?
Yes,
okay.
I was.
All right, AUC. So I think one of the things, not even specific to a fund, but as an entrepreneur, I mean, sometimes when you've been in an environment that's resource constrained, you start to shrink your dreams to match the resources that are available, right? You start to like think smaller because you don't have access to the same capital. But if you do that, you kind of have this self-fulfilling kind of problem that happens of like, oh, I start to want to tackle a small market, a small problem, and then you go looking for funding, and nobody wants to invest in like your little bitty idea in a little bitty market because the returns aren't there. So you have to balance, even though there's a resource constrained environment, okay, how am I going to really make a big scalable company? How can I deliver something that can change the world and deliver the size returns that justify that size check? And so we have to help minority entrepreneurs understand that even though we might have not access to the early stage capital at the same scale, how do we create a vision and a roadmap so that when you're ready for the Series A and you're ready for the Series B, you can walk in and have the conversations about how you're going to be an X billion-dollar company.
Perfect.
And of course, it does matter for the worlds to be equal. And the check sizes should be similar, and we're hoping to put our little brick into making it happen. And the work that we're doing also more and more integrated with the Vision Fund has that objective as well. One thing that I would say, though, is that it's not exactly the right goal to be optimizing for the size of the check or optimizing for the valuation in general. And that's true for all founders, regardless of which background they come from. The goal is always, or should always be, to build a great company. And you never really want to be caught up in this whole perpetual fundraising objectives or getting to the more higher sticker price or higher check size. That's not really what this is about. It's all about building great and sustainable companies over a number of years.
Got it.
I will just add that you mentioned, do not compromise ever your vision.
Right.
But also, as you're bringing those checks in, make sure that those investors, and we're very fortunate on that you increase that option pool to make sure that option pool is going to your team and not just to the founders. I think it's important that every round you're coming in, you're making sure that you're also refreshing their shares, because I see it over and over again where founders are just keep trying to get a land grab, and they begin to forget that this is really a team vessel.
Yeah.
So ensuring that when that check comes in, get those option pool in place, because we know that it's going to pay off in the long term, and that's what is supposed to happen.
Exactly. Beautiful. Thank you. Do we have any audience questions ready? Crystal's going to come down to you with the mic. Oh, okay. She'll get to you next.
Hello, my name is Sterling Smith, and I'm with Black Freelancer, a platform that helps Fortune 1000 companies identify and hire talented Black freelancers across the world. And the question that I have for you guys, specifically, anyone on the panel, but I guess you mentioned previously that you source most of your deals through your website, or that's where we can raise our hands. But what other funnels and places are you guys finding some of the best companies? I guess what's the highest success rate for a founder to get the attention of SoftBank?
You want to answer that?
Don't all speak at once.
Sure. So the form on our website is, of course, one of the sources, and we do go through every submission, and we do reach back out to the companies that have sent us something that's really exciting, and engage with them, and we have made some investments that way. Of course, it never hurts to know people within the venture community, or have your previous investors introduce you to us or any other venture firm that you are interested in working with. I think that we were introduced by your Series A lead. So that still happens. That's never a bad sign to have someone recommend you, especially if that's another capital provider or someone we know and trust. What is important for us is that it's not the only source. And in venture, in many cases, it used to be, and especially in the previous years, it used to be. We're very much trying to change that. So it's not necessary, but it does always help.
You covered it.
You feel satisfied with the answer? Beautiful. We have another question. I don't know if you want to hop around because she had her hand up. Okay, perfect. Thank you.
So I'm going to stand up. Two-part question, actually, from both sides. So, Paul, for you, what was the biggest challenge when you were initially trying to raise the funds as a minority? And from the investment side, what is the biggest challenge for you guys on when you try to decide in which businesses that are coming from minorities you will invest in?
Well, I'll take the first part. Everything is bliss in hindsight, right? I think that had we not reached our Series B, we would be out of business, point period, right? So how do you keep that straight face to your team saying, we're going to get to the finish line and we're going to get funded so we can continue because we're doing good work? And on the other side, ensuring that there's that level of urgency, ensuring that we're selecting the right term sheet and the right group of investors. So again, I've seen many startups that falter because they don't have the discipline to keep operating until the very last minute. I can tell you that there was a couple of times early on during the seed rounds that I took screenshots of the balance in the bank account where I'm telling you was on 1 or 2 digits in dollars, right? Where we'll be rushing to the bank just to put money in, just to be able to make payroll, which, by the way, we've never missed, even if the executives had to go without pay. So I will say you keep a strong face, you keep operating until that money hits the bank.
I mean, in terms of challenges of raising capital as an investor, right? I think that's part of your question. I mean, many of the same biases exist, right? We talk about the lack of access to minority founders. You see the same imbalance at the venture capital level. If you look at funds that are led by minority partners, I mean, it represents only a small single-digit percentage of overall kind of funds that are available in the industry. And so there's still work to do there as well. So as much as the community talks about the imbalance for entrepreneurs, that imbalance happens again at the fund level. And so lots of work to do there. But what helps is, as we talked about, kind of keeping your head down, executing. We know what that looks like as a founder. As an investor, that means continuing to deliver great returns week after week, year after year, decade after decade, and earning your right to earn the responsibilities and manage more and more capital on behalf of your LPs. And so that's what, for example, I do at Panoramic is you think about over the next several decades, think about your lifetime work. Like how do you kind of continue to build an institution, build a fund, build a firm that is long lasting, that is responsible for billions of dollars of capital. And the way we keep doing that is find great founders, support them, help them be successful, and then the rest will come.
Does that answer your question? Perfect. And we think we have another one in the back with Christina.
Hi there. So my name is Sunny Das. I run the venture scouting team at Freddie Mac. So first off, I want to say thank you so much for sharing the insight you have so far, and especially supporting some of the minority companies that are out there. I think for us in Freddie Mac, it's a challenge too to support affordable housing and find certain startups that understand that journey and what that actually looks like. So for a firm like ours, with Freddie Mac being a government-sponsored entity, there's some barriers there, and we're obviously a younger group. We've been around for around 4 years. So my question to you is, how do you, post-investment, how do you change the dynamic to be less transactional and more supportive for some of the startups that you work with on an advisory side, or some of the ways that you support their operations?
I mean, a lot of it has been about, the things we talked about. We're trying to bring content that can help if people are at this very stage of building the firm where they need exactly that. A lot of it is about community and helping them connect. To be very honest with you, a part of it is also validation. In general, having a top-tier VC write you a check that does help too, in terms of then getting more customers, getting more hires, and raising the next round. So obviously that kind of comes as a given with the check that we write. And we do try to get them as our companies that we invest in as closely connected with the broader ecosystem that we have. We have at this point, I think over 300 companies within SoftBank at large, maybe even more than that. And we do support them through having experts in-house who then work with our largest companies on the Vision Fund side and work with our companies with an opportunity fund too. So we try to build those bridges, and I think a lot of the work that happens post-investment is around building the bridges and offering the connections, as well as being there with advice whenever advice is needed.
Yep. And there's a person on team, Dami, who leads value creation, and yeah, see, she makes an impact everywhere. I was naming people earlier. I think I did mention Dami, but that's an important part of what Opportunity Fund does. But I think also even more broadly, if you think about kind of being helpful, what do people need? Like there's good times and there's bad times as a startup founder. It's this roller coaster, right? It's like, I'm killing it, it's killing me, I'm killing it, and it's like that for 7 years, right? And so as an investor, I think about, am I kind of one of the first calls when things are going well? Like does a founder call me with things, but more importantly, am I one of the first calls when things are going bad, right? So you just mentioned kind of when the account's running low, like someone's gonna get that call like, hey, what should I do? And are you there to help, and do you have perspective to help that fund? Like, I've been there, right? And so like, hey man, calm down, it's cool. I've been there too, here's how we did it. But then also, I was talking to someone yesterday, it's like, hey, they just raised a big round, and I was like, now what? Like, we have this money, how many people am I supposed to hire?
Too much.
How many do I hire too fast? And so there's those good times and bad times where you just wanna be there to help advice or a connection or intro or what have you.